Commercial real estate is a highly tax-advantaged industry. With the taxes deadline fastly approaching, many DST investors are preparing for tax season. Here's what DST investors should know about filing their tax returns each year. Reporting DST income. Since the IRS classifies ownership in a DST as direct ownership of real estate for tax purposes, DST shareholders will receive a substitute 1099 from the DST sponsor. This form outlines the income and expenses for each DST property owned. If there is any income earned from the DST, the investor must report their pro rata share of the income on their IRS Schedule E when filing their taxes. Can DST investors take deductions or depreciation? Yes. Because DST investors indirectly own a fractional share of the real estate held by the DST, investors can write off their pro rata share of expenses and depreciation. Therefore, investors can seek to maximize their returns by reducing the amount of money they owe to the IRS. Do investors need to report DST income in multiple states? Yes. Whether the investor owns DST properties in one or more states or in a different state entirely from which they live in, investors must respectively file a tax return in every state in which they have DST investments. When must DST investors file their taxes? Most DST investments, either active or passive, have until April 15th each year. However, on occasion, DST investments are made through an S-Corp or partnership, in which case the investors are required to file their taxes earlier by March 15th of each year. Nonetheless, it is important to monitor these deadlines closely to remain in compliance with IRS obligations. Investors should speak with their tax professionals for guidance with tax preparation and filing. If you're interested in learning more about DSTs or other real estate investment strategies, our team at Perch Wealth would be happy to answer any questions you may have. We're here for you and strive to help you achieve your investment goals. Contact a member of our team today or visit perchwealth.com for more information. This video presentation is not an offer to buy or a solicitation to sell a security. The video is a discussion pertaining to one or more investment strategies and/or asset classes, and is not a discussion of any specific offering, past or present, of securities. As a reminder, there is no guarantee that any investment or strategy will perform as targeted, and any investment involves the risk of the loss of some or all principal invested. This video contains statements intended for educational and hypothetical purposes only, and is not to be construed as a promise of performance. Information presented herein reflects the opinions of the speakers and is from sources believed to be reliable, but all information is subject to change. Not an offer to buy, nor a solicitation to sell securities. Information herein is provided for information purposes only and should not be relied upon to make an investment decision. All investing involves risk of loss of some or all principal invested. Past performance is not indicative of future results. Speak to your finance and/or tax professional prior to investing. Securities offered through Emerson Equity LLC, member FINRA SIPC. Only available in states where Emerson Equity LLC is registered. Emerson Equity LLC is not affiliated with any other entities identified in this communication. There is no guarantee that any strategy will be successful or achieve investment objectives. Potential for property loss. All real estate investments have the potential to lose value during the life of the investments. Change of tax status. The income stream and depreciation schedule for any investment property may affect the property owner's income bracket and/or tax status. An unfavorable tax ruling may cancel deferral of capital gains and result in immediate tax liabilities. Potential for foreclosure. All financed real estate investments have potential for foreclosure. Illiquidity. Because 1031 exchanges are commonly offered through private placement offerings and are illiquid securities, there is no secondary market for these investments. Reduction or elimination of monthly cash flow distributions. Like any investment in real estate, if a property unexpectedly loses tenants or sustains substantial damage, there is potential for suspension of cash flow distributions. Impact of fees and expenses. Costs associated with the transaction may impact investors' return and may outweigh the tax benefits.